Hey everyone, Isaiah here. In today's video, we're going to be discussing the 5 mistakes that I made early on in my trading, what I learned from them, and how you can make sure you can avoid them. Now before we get started, make sure you do stick around to the end if you are interested in funding challenges, as there is going to be a major announcement that I have to make at the end of this video. Now let's get straight into it. So the first mistake that I made, which I did allude to in my previous video, which you can watch here, is that I was monitoring and trading way too many pairs. So as I mentioned in that video, I was actually monitoring 16 different pairs, and I was doing a weekend outlook on 16 different pairs, marking up every single support and resistance line, looking for those breakout trades. Now that caused me to divide my attention across way too many pairs, across too many sessions. I didn't really even know what session timings were back then. I was just trading from the minute I woke up to the minute I went to sleep. And I didn't really understand any of the peculiar characteristics of each individual pair. Now moving into the smart money space, this is even more important, as a lot of different pairs are going to have different characteristics on the 1 minute. How they sweep liquidity, whether you need to wait for a body close for a change of character or just a wick. These subtle differences are going to make a huge impact on your overall performance. So decreasing the number of pairs that you look at and trade is essential for your continued success as a smart money trader. And the second mistake that I was making is that I was using fixed lot sizing. So how it worked was, for every $1,000 you had in your account, you'd risk 0.1 of a lot on that trade. Now the issue with that is, depending on what the cross of the currency pair you were trading, whether it was a USD cross, AUD cross, Swiss franc cross, then every single pip would have a different dollar amount associated to it. So the losses weren't consistent, and some losses could be double the size of other losses. We also didn't have a barrier or a limit as to how much we could go into drawdown per day. So now in the environment of prop firms where we have max daily drawdowns of 4 to 5%, moving across to an account and a percentage of an account balance sort of risk style is a lot more proficient, and the only way that you're going to be able to stay within those parameters safely. And following on from the first mistake, the third mistake that I was making is that I was overtrading. I was simply just trading too often. Especially when I quit my job to be a full-time trader, I felt that to be a full-time trader, I needed to be trading every minute of the day. And because I was monitoring 16 pairs, I could always find the setup. But what that led to was, sometimes I'd have 8 or 9 open positions. The drawdown was insane. There was one day where I did lose over 25% of my account balance just because I had correlated pairs, so all USD crosses, and they were all longs, and it just sank. So moving away from that, I definitely have gotten rid of that habit altogether. Now I only take maybe 3 to 4 trades a week, and I only monitor 1 pair and 1 session. So really dialing down into what works for me, and not having to spend too much mental energy on analyzing different pairs or understanding the different characteristics has been a game changer for me. So the advice that I could give you on this point here is, don't monitor any more than 3 pairs, especially if you're a smart money trader. 1 is more than enough. You can definitely use FX replay or backtesting just on TradingView to see the amount of possibilities that the market provides. Or if you really wanted to, you could trade 2 pairs, maybe AUD USD and Euro dollar, or GBP if that's what you prefer to. But definitely decreasing the amount we overtrade and minimizing it down to just a couple of pairs and a couple of sessions will transform your trading altogether. And the fourth mistake that I made was having unrealistic expectations. So in that first sort of year where I was trading really well, I went out and bought myself a 6 Series BMW, I bought a Rolex. I thought I was killing it. I was only 21 years old, and then life really hit me hard. So that's actually where the idea for Millennial Wealth Group started. My first business plan was from 6 years ago, where I realized that understanding the technicals wasn't enough to stay consistently profitable, as I didn't have my mental health in order, I didn't have my physical health in order. I was just trading all day long, and soon enough those bad habits that I'd created along the way crept up and really just hit me in the face. So making sure that you don't look all the different aspects of trading, and having realistic expectations. So as mentioned in last week's video, I tell my students all the time that you're not going to become a millionaire within the 12 months of learning how to trade. I mean, it is possible, it's just extremely unlikely, and the amount of risk that you'd have to take to do that is just too high. So having the realistic expectation of, this is something that I'm going to dedicate 3 to 5 years of my life to then be able to be in a position of financial freedom and to leave your job if that's something you want to do, be able to travel, be able to provide for your family completely on your own. It's such a rewarding feeling, being able to wake up every day and choosing what I want to do, when I want to do, as long as I'm able to trade London session, and it's honestly just been a game changer in my whole life. So just have those really realistic expectations. Don't come into the market thinking that you're going to be a millionaire overnight, or in 6 months time, or in 12 months time, as when you put those thoughts onto the market's really going to humble you. And lastly, the last mistake that I made was believing that trading was all about the technicals. I'd obviously heard the saying where people say trading is 80% psychology, 20% technicals, but I didn't really give it any weight at all. I just thought they just don't know how to trade, and my technicals were amazing and that I would be consistently profitable forever. As I just mentioned, that was definitely not the case. And making sure that you have a daily routine, having your habit tracking in order, journaling, going to the gym, making sure all these other aspects of your life are in place has been such a game changer. And without it, I don't think I'd be able to be consistently profitable, and I don't think you will either. So making sure that, yes, of course, you need to understand your edge. You need to understand how to get involved in the market, when to get involved, when not to get involved. But more so than that, you need to understand yourself and know mentally when to get involved, or when you're just having a bad day, when to walk away and leave the charts. Because honestly, sometimes the best trade is just not trading at all. So that's the 5 mistakes that I've made in my trading, which I think you should try to avoid. If you've had similar mistakes, please do let me know in the comments below. I'm sure a lot of you can resonate with this. Or if you're trying to now build a way to mitigate against these, please also let me know how you're planning on doing that. And at the beginning of the video, I did mention that if you stuck around to the end, I was going to give you an announcement regarding prop firms. So I have been lucky enough now to land a couple of deals with a couple of different prop firms, which I will be announcing a little bit later on in a couple of weeks' time. But what I am receiving is 2 giveaways for my community. So one will be a $25,000 challenge USD, and the other one will be a $50,000 USD challenge as well. So members of the community that are watching this, you automatically get enrolled. Your name has gone into the draw to win the challenges. And there is going to be some further things which I'll be posting on social media, so make sure that you're following me on my Instagram as to how you can also go in the running to win these giveaways. Now, as an added benefit of landing these deals, the next 5 members who join the community will be receiving their name put into the draw twice. And further than that, there is also going to be a 10% discount on the upfront and the month and the installment plan, but not on the monthly membership. So I've never had a 10% deal before. I've never had any sort of deal like this before. So if you have been thinking about getting involved for a while, this is now the time. You'll get your name put into the draw twice, so you have a higher chance of winning one of these prop firm challenges, and you'll also receive that discount on your upfront joining fee. So if you have any questions, please do let me know. I will be putting the discount code in the description below. It will also be announced on my free Discord. So if you're not currently a part of the free Discord, the link to join the free Discord is in the description below as well. I look forward to meeting you all there, and I look forward to welcoming the 5 new members that will be joining the community. This will also end by the end of next weekend. So make sure that you do get in, as it's just going to be first in, best dressed. If you have any questions, guys, let me know. Otherwise, I look forward to speaking to you all next week.